What exactly is the stock market? It is a digital marketplace connecting the world. It is the central place where businesses find investors and people buy and sell ownership. Think of it like a giant, global farmer's market. Instead of fruits and vegetables, companies like Apple or Amazon sell pieces of their business. Key takeaways: it's where buyers and sellers meet. Prices change based on supply and demand, and most trading happens instantly on your phone or computer. What is a stock or share? A share is a tiny piece of a company's ownership. The meaning is that when you buy a stock or share, you are literally becoming a part owner of that business. Imagine a giant pizza. The whole pizza is the company, and a share is one slice. You don't own the whole shop, but you own your slice. Stocks and shares mean the same thing, and you benefit when the company succeeds. Why do companies sell shares? To raise capital for growth and expansion. An alternative is a bank loan, which must be repaid with interest. Selling shares means shared success, no repayment, and the company gets the cash it needs to innovate and grow. It's like a baker opening a second bakery. They ask a friend for money in exchange for a piece of future profits. The result is funding the big idea. Companies use the money to build new products and expand faster. What does investing mean? Investing is putting your money to work. It is the act of buying an asset, like a stock, with the expectation that it will generate more money for you in the future through growth or payments. Investing is like planting a seed. You can't eat it today, but it grows into a tree that provides fruit for years. It is a long-term strategy about building future wealth. Your money earns money, working while you sleep. What is inflation? Inflation is the silent thief of your purchasing power. It is when the prices of goods and services rise over time. As prices go up, the buying power of a single dollar goes down. Think of a candy bar. In 1970, it might have cost 10 cents. Today, that same candy bar costs $2. Cash loses value over time, and keeping money under the mattress is actually losing you money. Investing helps your money grow faster than inflation. Why should you invest instead of just saving? Investing builds wealth, while saving only stores it. While saving is great for emergencies, it won't keep up with inflation. Investing gives your money the chance to outpace inflation and grow significantly over time. Saving is like keeping your car in the garage, safe but stagnant. Investing is like putting that car on the highway. It carries you toward your destination much faster. Use savings for short-term safety and investing for long-term growth. What is a brokerage account? It's your gateway to the financial world. A brokerage account is a specific type of financial account that allows you to buy and sell stocks, bonds, and ETFs. You cannot buy stocks through a standard checking or savings account. Think of a brokerage account like a passport. You can't enter the stock market country without one. It's the tool that gives you permission to trade and connects your bank to the stock market. What is a share price? It is the current cost to own one slice of a company. The share price is the dollar amount the market has agreed a single share is worth right now. This price fluctuates constantly based on how much people are willing to pay. It's like the price tag on a shirt at a store. However, unlike a fixed price tag, the price tag on a stock changes every time someone buys or sells it. Remember, a high price doesn't always mean expensive, and a low price doesn't always mean cheap. How much do you need to start investing? Less than $100. It's about consistency, not the starting amount. Fractional shares allow small investments. Start with what you can afford and grow over time. Investing is like building with Lego bricks. You don't need the entire set to start. Each small brick you add makes your structure bigger and stronger. The entry fee to wealth is now $0. Small, frequent additions build a massive foundation over time. Fractional shares allow you to buy a portion of a single share. This means you can invest in expensive stocks with a small amount of money, buying a percentage of a share instead of the whole thing. Imagine buying a high-end chocolate bar that costs $25, but you only have $5. Fractional shares allow you to buy just one square of that bar, making expensive stocks affordable. You can also invest by dollar amount, not share count, which allows for diversification. Investing is like a fruit tree, providing both growth and income. Growth, or capital gains, is when your tree becomes bigger and more valuable. Income, or dividends, are the regular payments you receive from the company, like picking the fruit every season. You make money from investing through growth and income. Growth happens when your stock price increases. Income, or dividends, are cash payments sent to you by the company, which can also be reinvested. Compound interest is your money's superpower. It's not just about what you save, but what your savings earn. Compound interest is the interest you earn on your initial investment plus the interest you've already earned, leading to exponential growth. The financial snowball effect involves time, contributions, and interest. The hill represents time. Adding snow is your monthly contribution. The roll is your money-earning interest. Together, your contributions plus interest create exponential growth, the multiplier. What is an ETF or exchange-traded fund? Don't bet on one company. Buy the all-star team. An ETF is a team of stocks that lets you own a piece of many top-performing companies at once. The rosters include SPYM, the S&P 500 ETF, which is your core all-star team of the 500 largest U.S. companies. SPYG, the S&P 500 Growth, is your high-scoring team, focusing on the fastest-growing companies. Both are portfolio ETFs with low fees. The Innovation Powerhouse ETFs are about betting on the future of technology. QQQM, the NASDAQ 100, is your tech heavyweight, holding the 100 largest non-financial companies on the NASDAQ. SOXQ, Semiconductors, is your engine room, owning companies that make computer chips. The monthly payday duo ETFs offer regular income. SPYI, S&P 500 High Income, is your S&P 500 with a paycheck. QQQI, NASDAQ 100 High Income, is your high-tech cash machine. These funds use special strategies to pay you a high monthly dividend. What are stock market sectors? The stock market is like a giant grocery store, organized into 11 sectors or aisles. Each sector is a group of companies that sell similar products. The core sectors include technology, the innovation aisle, focused on growth like AI and software. Healthcare, the essential aisle, offers stability with hospitals and medicine. Financials, the money aisle, provides income from banks and insurance. What is risk? Risk is the price of admission to the wealth show. It is the possibility that your actual return will differ from what you expected, including losing some or all of your original investment. Strategies like owning ETFs can significantly reduce risk. The spectrum of risk and reward ranges from low risk, like a slow-moving escalator, to high risk, like a rocket ship, with the potential for massive gains. Manage risk through diversification, like owning an ETF, rather than avoiding it entirely. What is market volatility? Think of it as a roller coaster. Volatility is the temporary normal up and down movement of stock prices. It actually creates opportunities to buy shares at a discount. On the roller coaster of market volatility, remember, don't jump off. Stay seated. Your safety bar is your long-term plan and diversified ETF. Focus on value, not just price, and stay seated through the loops to reach the end of the ride.
In the last 5 decades, the market has been positive nearly 80% of the time, with an average annual return of 11.7%. The long-term story is always the same: growth. If you're playing the long game, you're already winning. Hit that follow button for more ways to master the market. Peace, blessings, financial freedom.